A leading manufacturer in cryogenic equipment, INOX India is going for an IPO this week. In this video, we will talk about the business and the industry it operates in. We will talk about the market opportunity, the financials and the valuation. First up, let's cover the IPO details. INOX India IPO will open for public subscription on December 14 and close on December 18. It has fixed the price band at Rs 627 to 660 per share. The company plans to raise 1,459 crore rupees from the public issue, which is completely an offer for sale. In an offer for sale, existing shareholders of the company, such as promoters or any other large investors, sell their shares to the public. Of the total issue, 50% is reserved for qualified institutional buyers, 35% for retail investors like you and I, and the remaining 15% for non-institutional investors. Interested investors can apply for a minimum of 22 shares in the issue. Now, since there is no fresh issue in the IPO, the company will not receive any proceeds and all the funds will go to the selling shareholders. INOX India's decision to go public is part of its plan to capitalize on the advantages of being listed, including visibility, market credibility, and access to a broader investor base. INOX India Limited is among the biggest producers of cryogenic equipment. These equipment refer to the category of machinery designed to handle and operate in extremely low temperature environments. So INOX India makes, delivers, and sets up these equipment used in industries like green hydrogen, energy, chemicals and fertilizers, steel, healthcare, and more. They have more than 30 years of experience and also export and are involved in global scientific research projects. The global cryogenic equipment market was valued at $11.5 billion in 2022, and the demand is projected to grow at a CAGR of 6.9% from 2023 to reach about $16.6 billion by 2028. Notably, the demand for cryogenic equipment is expected to be driven by the increased demand for cleaner fuels such as LNG and hydrogen due to the focus on reducing carbon emissions. Now, INOX India operates across three key divisions: the industrial gas division, LNG, and the scientific and industrial research. Notably, the company caters to diverse sectors, with one prominent client being ISRO through its division involved in scientific and industrial research. In terms of client concentration, the largest customer accounts for 14.4% of INOX India's revenues. The top 10 customers collectively contribute to about 56% of the revenues. Further widening the scope, the top 20 customers account for substantial 73% of INOX India's total revenues. INOX India is also the largest exporter of cryogenic tanks from India in terms of revenue. It exports its products to about 66 countries, and the export business contributes about 62% of its total revenues. Coming to the financials, for the 6-month period ending September 2023, INOX India's revenues increased 16% year over year to 5,650 million. In fiscal year 23, the company's revenues increased 22%. Moreover, INOX India maintains a positive bottom line, with a net profit soaring about 24%, translating a PAT margin of 17.82%. This margin represents a slight improvement compared to the 16.9% recorded during the prior period. It also commands a ROCE of 23.8% and ROE of 18.6%. The company is also cash flow positive and has a net debt value of negative 2,215 million, which implies that the company has more cash and investments than its total debt. So no companies are listed in India that operate a business comparable to INOX Limited. Therefore, it is not feasible to offer an industry comparison for this company. Coming to valuation, with the upper price band of Rs 660 and an EPS of 11.4 rupees, it translates into a PE of 58 times. Now, coming to its future growth plans, the management envisions positioning INOX as an MNC within the next 4 to 5 years, establishing its headquarters in India while extending its reach across various global regions. Additionally, there are plans to engage in joint ventures with other companies, particularly in the medical field, to incorporate new technologies. As part of its growth strategy, the company also intends to make a significant investment of Rs 200 crores over the next 2 years for the development of its fourth plant. Having said that, this is me, Molinzana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com